Hey everyone, welcome back to Corporate Decoder. Today, Virtus Opportunities Trust just filed its N-CSR report, and I spotted a few trends that really stand out. Quick note, this is not financial advice, just my take on public filings for educational purposes. What is really interesting here is seeing how these funds are allocating their assets right now, specifically focusing on that, the 31st of March 2026 snapshot. Alright, let's dive into this N-CSR filing from Virtus Opportunities Trust. This is essentially a snapshot of how these mutual funds are doing at a specific point in time, and for us, it is a goldmine for understanding where investor money is being put to work. We're looking at the period ending the 31st of March 2026. Now, the faces behind this filing are George R. Aylward, the President, and W. Patrick Bradley, serving as Executive Vice President, Chief Financial Officer, and Treasurer. They are signing off on this report. Let's start with the Virtus Duff and Phelps Global Infrastructure Fund. As of the 31st of March 2026, their net assets were a substantial $173,148,000. That is $173 million. They held 53 total portfolio holdings, and that portfolio turnover rate was 25%. This means about a quarter of the fund's holdings were bought or sold during the reporting period. When we look at their asset allocation, a whopping 50% is in utilities, then industrials at 28% and energy at 17%. Next up, the Virtus Duff and Phelps Global Real Estate Securities Fund. This fund has considerably more assets under management at $400,000 and $24,000. That is $400 million. They hold 54 different assets in their portfolio and had a portfolio turnover rate of just 6%. This indicates a much more buy and hold strategy. Their asset allocation here is heavily weighted towards REITs industrial office. REITs lead the pack at 18%, followed by healthcare REITs at 15% and retail REITs at 14%. Then we have the Virtus Duff and Phelps Real Asset Fund with $48,693,000 in net assets. That is about $48 million. This fund holds only 11 portfolio holdings, showing a very concentrated approach. Their turnover rate is also low at 6%. Interestingly, their asset allocation is dominated by affiliated mutual funds at 77%, with exchange-traded funds making up another 19% and affiliated exchange-traded funds at 4%. We also see another Virtus Duff and Phelps Real Estate Securities Fund listed. This one has $341,142,000 in net assets, so $341 million. They hold 31 portfolio holdings and have a turnover rate of 5%. Their asset allocation is focused on REITs with 21% in healthcare REITs and 18% in industrial office REITs. Moving on to international exposure, we have the Virtus Car Developing Markets Fund with $3,667,000 in net assets, which is about $3.6 million. This fund holds 42 assets with a portfolio turnover rate of 24%. Their asset allocation is spread across industrials at 39%, financials at 15%, and consumer staples at 13%. The Virtus Car Emerging Markets Small Cap Fund is quite significant with $336,728,000 in net assets. That is $336 million. They hold 43 assets and have a portfolio turnover rate of 31%, indicating a slightly more active strategy. Industrials are again the top sector at 40%. Followed by financials at 16% and consumer staples at 12%. Then there is the Virtus Car International Small Mid Cap Fund with substantial net assets of $783,000 and $38,000. That is $783 million. They hold 40 assets and the portfolio turnover rate is 19%. Their asset allocation is led by industrials at 36%, financials at 22%, and healthcare at 14%. Let's shift gears to bonds with the Virtus New Fleet Core Plus Bond Fund. This fund is large with $626,584,000 in net assets, so $626 million. They hold a significant 742 assets and have a portfolio turnover rate of 14%. Their asset allocation is a blend of corporate bonds and notes at 34% mortgage, backed securities at 29% and US government securities at 15%. The Virtus New Fleet High Yield Fund is smaller with $51,565,000 in net assets. They hold 233 assets and have a portfolio turnover rate of 19%. As expected for a high yield fund, their allocation is overwhelmingly in corporate bonds and notes at 95%. Next, the Virtus New Fleet Low Duration Core Plus Bond Fund. This fund is also quite substantial with $412,982,000 in net assets. That is $412 million. They hold 558 assets and have a portfolio turnover rate of 23%. Their asset allocation looks interesting with asset backed securities at 32% mortgage, backed securities at 28%, and corporate bonds at 25%. The Virtus New Fleet Multi-Sector Intermediate Bond Fund is another large player with $938,779,000 in net assets. That is $938 million. They hold 925 assets with a turnover rate of 24%. Their asset allocation is diverse, including corporate bonds and notes at 34% mortgage, backed securities at 23%, and foreign government securities at 16%. Then we have the Virtus New Fleet Multi-Sector Short-Term Bond Fund, a very large fund with $4,772,399,000 in net assets. That is almost $4.7 billion. They hold a staggering 914 assets and have a portfolio turnover rate of 22%. Their allocation is also quite diverse, with corporate bonds and notes at 27%, mortgage-backed securities at 25%, and asset-backed securities also at 27%. In the floating rate space, the Virtus New Fleet Senior Floating Rate Fund has $127,000 and $89,000 in net assets, so $127 million. They hold 252 assets with a turnover rate of 21%. This fund is heavily invested in leveraged loans at 96%. For tax-conscious investors, the Virtus seeks tax. Exempt Bond Fund has $45,611,000 in net assets, or $45 million. They hold 73 assets and have a very low turnover rate of 11%. Unsurprisingly, their entire allocation is in municipal bonds, that is 100%. Back to international equities, the Virtus SGA Emerging Markets Equity Fund has $447,415,000 in net assets, so $447 million. They hold 27 assets with a turnover rate of 16%. Their top sector allocations are financials at 28%, consumer discretionary at 25%, and information technology at 18%. Across these funds, a major theme is the sheer size. We are seeing net assets ranging from as low as $3.6 million for the Car Developing Markets Fund, all the way up to nearly $500 million for the Virtus Duff and Phelps Real Estate Securities Fund. That means a lot of investor capital is being managed here. The number of holdings also varies quite a bit. Some funds like Real Asset Fund are highly concentrated with only 11 holdings, while others like New Fleet Core Plus Bond Fund hold a diversified 742. This concentration or diversification is a key indicator of strategy, and that portfolio turnover rate we mentioned, a low rate like 6% in the real asset or real estate securities fund, suggests a long-term investment approach. A higher rate like 31% in the emerging markets small cap fund indicates more active trading, potentially tactical shifts in strategy. Now, the asset allocation across these funds is exactly what you'd expect. Infrastructure funds are heavy in utilities and industrials. Real estate funds are focused on REITs. Bond funds are well in bonds with varying durations and credit quality. The equity funds are investing in global markets across traditional sectors, like financials and tech. Looking at the breakdown for the Duff and Phelps Global Infrastructure Fund, we see common stocks making up 99.4% of their holdings. The largest single holding is ASA Spain at $11,198,000, or $11 million. For Duff and Phelps Global Real Estate Securities Fund, we see common stocks at 99.8%. The largest holdings here are Prologis Inc. and Equinix Inc., both in the US at $26,650,000 and $25,496,000 respectively. That is $26 million and $25 million each. The Duff and Phelps Real Asset Fund is interesting because it is primarily invested in affiliated mutual funds at 77.2%. Within that, equity funds take up 75.6%. The largest holding here is the Virtus Duff and Phelps Global Infrastructure Fund Class R6 at $15,981,000, or about $16 million. Returning to the Duff and Phelps Real Estate Securities, fund common stocks are 99.5% of their investments. The top holding is Prologis Inc. at $34,716,000 and Equinix Inc. at $25,496,000. The Car Developing Markets Fund is almost entirely in common stocks at 94.4%. The largest position is Alibaba Group holding limited sponsored ADR at $45,000, representing a very small part of the fund given its overall size. For the Car Emerging Markets Small Cap Fund, common stocks are 89.5% of the portfolio. Their largest holdings are in Tencent Holdings Limited and BBB Foods Inc. The Car International Small Mid Cap Fund is fully invested in common stocks at 100%. Major holdings include Diametra Telecomunicazioni PT and Infrastructure Wireless Italian SPA. This New Fleet Core Plus bond fund is heavily invested in bonds, with corporate bonds and notes at 34%, mortgage-backed securities at 29%, and US government securities at 15%. The New Fleet High Yield Fund, as expected, is almost entirely in corporate bonds and notes at 95%. The New Fleet Low Duration Core Plus bond fund has a significant allocation to asset-backed securities at 32% and mortgage-backed securities at 28%. Similarly, the New Fleet Multi-Sector Intermediate Bond Fund has a large chunk in corporate bonds and notes at 34% and mortgage-backed securities at 23%. And the New Fleet Multi-Sector Short-Term Bond Fund also shows a significant allocation to corporate bonds and notes at 27% and asset-backed securities at 27%. The New Fleet Senior Floating Rate Fund is heavily weighted towards leveraged loans at 96%. The Virtus Seeks Tax Exempt Bond Fund is 100% invested in municipal bonds. And the Virtus SKY Emerging Markets Equity Fund is concentrated in financials at 28% and consumer discretionary at 25%. Diving into the schedules of investments, we see some eye-popping numbers for the Duff & Phelps Global Real Estate Securities Fund Equinix Inc. A loan is valued at $25,496,000. That is over $25 million. Digital Realty Trust Inc. is also a substantial holding at $19,188,000. These are massive bets on real estate infrastructure. In the Real Asset Fund, their investment in affiliated mutual funds is significant. For example, Virtus Duff & Phelps Global Infrastructure Fund Class R6 is held at $15,981,000, and Virtus Duff & Phelps Global Real Estate Securities Fund Class R6 at $12,374,000. This fund is essentially investing in other Virtus funds. The CAR International Small Mid Cap Fund shows a strong concentration in the United Kingdom at 18% and the United States at 67% for their country weightings. Their top holdings include Diametra Telecomunicazioni PT and Infrastructure Wireless Italian SPA. Looking at New Fleet Core Plus Bond Fund, we see a massive amount of mortgage-backed securities at $182,800,000. That is $182 million. Their US government securities are valued at $92,602,000. For the New Fleet High Yield Fund, corporate bonds and notes are a massive $47,483,000. That is $47 million, representing 92.1% of the fund. The New Fleet Low Duration Core Plus Bond Fund has a significant portion in asset-backed securities at 32% and mortgage-backed securities at 28%. New Fleet Multi-Sector Intermediate Bond Fund's allocation shows corporate bonds and notes at 34% and a hefty 29% in mortgage-backed securities. And for the New Fleet Multi-Sector Short-Term Bond Fund, they have major exposure to corporate bonds and notes at 27%, asset-backed securities at 27%, and mortgage-backed securities at 25%. The New Fleet Senior Floating Rate Fund is heavily concentrated in leveraged loans at 96%, as expected. Finally, the Virtus Seeks Tax Exempt Bond Fund is 100% in municipal bonds. Now let's look at the statements of assets and liabilities. For the Duff & Phelps Global Infrastructure Fund, net assets are $173,148,000 or $173 million. This is built upon nearly $172 million in investment securities. The Duff & Phelps Global Real Estate Securities Fund is much larger with net assets of $400,000 and $24,000. That is $400 million. Their investment in securities is almost the entire amount. The Duff & Phelps Real Asset Fund, with $48,693,000 in net assets, shows a significant portion of investments in affiliates at value, $39,319,000. The Duff & Phelps Real Estate Securities Fund has $341,142,000 in net assets, so $341 million primarily in investment securities. The CAR Developing Markets Fund has the smallest net assets at $3,667,000. That is about $3.6 million. The CAR Emerging Markets Small Cap Fund has net assets of $336,728,000 or $336 million, with the bulk of that in investment securities. The CAR International Small Mid Cap Fund is a powerhouse with net assets of $783,038,000. That is $783 million. Their investment in securities is astronomical. New Fleet Core Plus Bond Fund is also massive with $626,584,000 in net assets, or $626 million. They have a significant amount of debt instruments at $615,220,000. New Fleet High Yield Fund has net assets of $51,565,000, or $51 million, mostly tied up in corporate bonds and notes. New Fleet Low Duration Core Plus Bond Fund shows net assets of $412,982,000. That is $412 million. They have a large allocation for asset-backed securities and mortgage-backed securities. New Fleet Multi-Sector Intermediate Bond Fund is the largest by net assets at nearly $939 million. They have a diverse portfolio across various bond types. And the New Fleet Multi-Sector Short-Term Bond Fund is a giant with nearly $4.7 billion in net assets. It is heavily invested in corporate bonds and notes, mortgage-backed securities, and asset-backed securities. The New Fleet Senior Floating Rate Fund has $127,000 and $89,000 in net assets, so $127 million. Mainly in leveraged loans. The SEEKS Tax Exempt Bond Fund has $45,611,000 in net assets, so $45 million with 100% of its investments in municipal bonds. Finally, the Virtus Scartier Emerging Markets Equity Fund has net assets of $447,415,000, or $447 million, primarily invested in common stocks. Across all these funds, the total investments figure shows the immense scale of capital managed by Virtus Opportunities Trust. It is hundreds of millions, even billions of dollars in some cases, all allocated according to distinct investment strategies. When we look at the statements of changes in net assets, we see the movement of money. For the Duff and Phelps Global Infrastructure Fund, operations added over $17 million while capital transactions decreased it by about $8 million, leading to a net increase of $13 million. This shows more money going in than coming out from investments. The Duff and Phelps Global Real Estate Securities Fund saw a significant decrease in net assets from operations, a loss of over $12 million. But this was offset by capital transactions that increased net assets by almost $23 million, leading to a net increase of about $9 million. The Duff and Phelps Real Asset Fund saw a solid gain from operations of over $4 million, but capital transactions decreased its net assets by about $271,000, resulting in a net increase of $4.4 million. The Duff and Phelps Real Estate Securities Fund experienced a considerable drop in net assets from operations, a loss of $17 million. But this was somewhat countered by capital transactions that added about $8 million, leading to an overall decrease of $8.8 million. The Virtus Car Developing Markets Fund, being the smallest, saw a small net increase of $53,000 from operations and a net decrease from capital transactions. The Car Emerging Markets Small Cap Fund had a significant loss from operations of $8.5 million, but this was more than offset by capital transactions, which added over $9 million, resulting in a net decrease of $8.5 million. This indicates capital outflows are not keeping pace with operational losses. The Car International Small Mid Cap Fund had a large operational loss of nearly $80 million, and capital transactions also decreased net assets by almost $152 million. This resulted in a substantial net decrease of $266 million. This is a major outflow and needs attention. The New Fleet Core Plus Bond Fund is a beast. It saw a healthy increase from operations of nearly $5 million, but a significant decrease in net assets from capital transactions of over $18 million, leading to a net increase of just under $1 million. New Fleet High Yield Fund had a small net loss from operations of $54,000, but capital transactions added over $3 million, resulting in a net increase of $1.6 million. New Fleet Low Duration Core Plus Bond Fund had a great operational gain of nearly $7 million, but saw a huge decrease from capital transactions of over $43 million. Overall, a net decrease of $45 million. New Fleet Multi-Sector Intermediate Bond Fund had over $9 million in operational gains, but capital transactions subtracted over $11 million, resulting in a net increase of $9.8 million. They are growing. And the New Fleet Multi-Sector Short-Term Bond Fund is the star here. It generated almost $78 million from operations and added another $143 million from capital transactions for a massive net increase of over $227 million. This fund is really bringing in the money. New Fleet Senior Floating Rate Fund saw a net operating gain of just under $2 million, but a significant decrease from capital transactions of over $41 million, leading to a net decrease of $44 million. The SEEKS tax-exempt bond fund had a modest operational gain of $684,000, but a decrease from capital transactions of over $5 million, resulting in a net decrease of about $500,000. Looking at the statements of operations, we see the income and expense breakdown. For the Virtus Duff and Phelps Global Infrastructure Fund, they earned $273,000 in investment income, but had net expenses of $859,000 after waivers, leaving a net investment income of $1,214,000. They also saw a substantial net realized and unrealized gain on investments of $15,837,000. The Virtus Duff and Phelps Global Real Estate Securities Fund had strong investment income of $6,139,000, but their net expenses were close to $2,000 after waivers. Their net investment income was over $4.2 million. However, they had a substantial net unrealized and realized loss on investments of nearly $2.2 million. The Virtus Duff and Phelps Real Asset Fund had a smaller operational picture with $723,000 in investment income and net expenses of only $63,000, resulting in a net investment income of $660,000. They showed a positive net realized and unrealized gain on investments of $2.1 million. The Virtus Duff and Phelps Real Estate Securities Fund had solid investment income of $5,429,000, but also significant net expenses of $1,600,000. Their net investment income was over $3.7 million, but they experienced a net loss from investments of over $5 million. The Virtus Car Developing Markets Fund had minimal investment income and a very small net expense, leading to a net investment income of $44,000. Their gains and losses on investments were also very small. The Virtus Car Emerging Markets Small Cap Fund had strong investment income of $5,507,000, but also substantial net expenses of over $2,500,000. Their net investment income was nearly $3 million, but they incurred a large net loss on investments of over $8.5 million. The Virtus Car International Small Mid Cap Fund had the highest investment income of all funds at $13,746,000. However, their net expenses after waivers were also substantial at over $5,000. This led to a net investment income of nearly $8 million, but a significant unrealized loss on investments of nearly $74 million. The New Fleet Core Plus Bond Fund generated impressive investment income of $15,657,000, but also carried high net expenses of nearly $1.5 million. Their net investment income was substantial at over $14 million. However, they experienced a massive net change in unrealized depreciation on investments to the tune of nearly $11 million. Leading to a significantly reduced net realized and unrealized gain on investments. New Fleet High Yield Fund had investment income of $1,826,000 and net expenses of $220,000, resulting in a net investment income of $1.6 million. They experienced a net loss on investments of over $800,000. New Fleet Low Duration Core Plus Bond Fund had a strong net investment income of over $9 million, but also high net expenses of over $1.1 million. The major story here is the unrealized depreciation on investments of nearly $2.7 million. New Fleet Multi-Sector Intermediate Bond Fund showed a robust net investment income of nearly $7.9 million, but also very high net expenses of $3.4 million. They experienced a significant unrealized depreciation on investments of over $14 million. And finally, New Fleet Multi-Sector Short-Term Bond Fund. This fund is a powerhouse in terms of investment income at over $123 million. Their net expenses were also quite high at $1.4 million, but their net investment income was still a massive $107 million. However, they too suffered from substantial unrealized depreciation on investments of over $10 million. When looking at the total return figures for the 6 months ending the 31st of March 2026, some funds are in the positive territory, like the New Fleet Core Plus Bond Fund Class A with a 10.21% total return, and the Virtus New Fleet High Yield Fund Class A with a 10.61% return. Others, like the Car International Small Mid-Cap Fund Class A saw a double-digit negative return of nearly 8%, and the Virtus Duff and Phelps Real Estate Securities Fund Class A also landed in negative territory. This highlights the diverse performance across these different investment strategies. The end-of-period net assets show the dominant players. Virtus New Fleet Multi-Sector Short-Term Bond Fund is the largest by far with almost $4.7 billion in net assets. The next largest are Virtus New Fleet Multi-Sector Intermediate Bond Fund at $938 million. Duff and Phelps Global Real Estate Securities Fund at $341 million and Car Emerging Markets Small Cap Fund at $336 million. The smaller funds like Car Developing Markets are at around $3.6 million in net assets. The expense ratios are also a key takeaway. You see, Class A shares generally have higher ratios than Class I or R6 shares, as expected due to distribution and service fees. For example, the Virtus Duff and Phelps Global Infrastructure Fund Class A has a net expense ratio of 1.23%. While Class R6 is lower at 0.85%. The structure of these funds is a series of multiple mutual funds, each with its own investment objective. This allows Virtus to cater to a wide range of investor needs. The large number of holdings in some of these funds, like the 742 and Newfleet Corp Plus Bond Fund, suggests a broad diversification strategy. It is important to note the sub-advisor structure. For example, Virtus Duff and Phelps Global Infrastructure Fund is managed by DPA, Duff and Phelps Investment Management Company. This is a common setup where a main firm oversees multiple specialized sub-advisors. This structure allows them to leverage expertise across different asset classes. A notable change is that effective the 21st of January 2026, Class C shares were closed to new purchases for several funds, including the Virtus Duff and Phelps Global Real Estate Securities Fund. This is a business decision likely related to managing the fund's size or strategy. Looking at the overall picture, Virtus Opportunities Trust manages a vast amount of capital across a diverse range of mutual funds. While some funds like the Newfleet Multi-Sector Short-Term Bond Fund are bringing in significant inflows and showing strong operational gains, others, especially those in emerging markets or with heavy equity exposure, are experiencing unrealized losses. The expense ratios also vary considerably, highlighting the importance of choosing the right share class for your investment. The story here is one of scale, diversification, and varied performance across different market segments. That is my take. Stay decoded.